The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
Welcome to the 5-Star Weekly Briefing, your pulse on the hospitality industry.
This week's briefing is brought to you by GAIN, Growth Advisors International Network, a global network of C-level experts providing strategic advisory and commercialization services to hotel groups and hospitality tech innovators.
It's today, Friday, 22 May 2026, and we have a massive week of industry moves to get through with you.
Yeah, we really do. And we're looking at a truly fascinating contradiction in the market right now. Because if you follow the money this week, I mean, investors are pouring absolute billions into ultra-luxury, highly physical real estate.
Right, massive physical assets.
Exactly. But if you look at what's actually driving the value of those physical spaces, well, the biggest disruption is coming from invisible automated AI systems.
Operating entirely behind the scenes.
Yeah, exactly. So today, we're going to unpack exactly how developers and operators are trying to, blend these two extremes.
It's a huge challenge. That tension between the physical asset and the invisible service layer that is basically defining the current market.
Absolutely.
And to see how that physical landscape is shifting, we don't even need to look at traditional city centers. We're seeing some highly distinct market plays unfold on opposite ends of the geographic spectrum, starting right at the top of the map.
Literally at the top, yeah. So IHG Hotels and Resorts has just officially opened the voco Darwin Suites.
Which is a big deal.
Huge. It's a massive milestone for them because it marks the premium brand's absolute debut in the Northern Territory. But what really caught my eye here is the product type.
The suites.
Right. This introduces the first ever voco suites variation to the entire Australian market. Sean D'Souza is taking the reins there as portfolio general manager. And, bringing a premium suite-led offering to the top end feels like a very targeted play for a highly specific kind of modern traveler.
Oh, it absolutely is. You have to look at the unique demographics of the Darwin market to understand why a suite variation makes sense there.
Because it's different from the East Coast.
Totally different. It is a highly transient yet long-stay environment. So you have government contractors flying in for weeks at a time.
Right.
You have corporate sector workers managing regional infrastructure, and you have high-yield leisure tourists using it as a base camp for the national parks.
Which takes time to explore.
Exactly. A standard overnight hotel room becomes incredibly claustrophobic after day 3. So a suite-led product provides that flexible residential feel.
A place to actually work and live.
Precisely. Which traditional rooms simply cannot match. It's a very smart adaptation of the voco brand to fit the environmental reality of that region.
Yeah, that makes a ton of sense. And speaking of residential feels, but, shifting away from the tropics, let's look at what's happening down in Queensland.
Oh, Brisbane.
Yep, Brisbane. International hotel group TFE Hotels just officially opened the 148-room Adina Chermside Brisbane.
Right, I saw that.
Yeah, they've perfectly aligned this launch with Australian Made Week, and the property itself is designed around this beautiful interpretation of subtropical urban living.
It looks fantastic.
It really does. Yeah. But here is the kicker for me. It is offering a mix of studio and one-bedroom apartment-style accommodation entirely outside the Brisbane CBD.
Right, in the suburbs.
Exactly. Limitless Developments put this together. WMK Architecture designed it. And Anthony Rich and Chris Sedgwick over at TFE are steering the ship. Okay, let's unpack this.
Let's do it.
If you are a developer looking at the landscape right now, is moving premium apartment-style accommodation strictly outside the CBD, the new power play for developers. I mean, it's like creating miniature, self-sustaining CBDs in the suburbs.
Well, the math on CBD real estate is really just forcing developers to get creative, and suburban hubs are the logical answer.
Because of the cost.
Cost, yes, but also infrastructure. Chermside isn't just a quiet residential suburb. It has massive entrenched infrastructure.
But like the hospitals.
Exactly. You have major hospital networks, regional business parks, and massive retail precincts. By placing a premium product like an Adina there, well, developers are capturing a localized audience that wants high-end, long-stay comfort, but absolutely refuses to deal with the friction of commuting into a saturated city center every single day.
Yeah, that makes complete sense. I mean, if you are visiting a relative in a major regional hospital or consulting at a suburban business park for a month, you don't want to fight downtown traffic just to get back to a nice hotel.
Exactly the point. It is decentralized hospitality. The localized corporate and leisure demand in these hubs is incredibly steady.
Right.
And more importantly, it is completely insulated from the heavy competition of the central business district.
Wow, yeah. And the success of that kind of localized, decentralized model is clearly giving investors the confidence to look even further outside traditional urban centers.
Oh, absolutely.
Because if you look at the pipeline, we were tracking an absolute flood of capital pouring into regional ecotourism and ultra-luxury development.
The sheer volume of regional investment we are seeing this week is just staggering.
It's wild.
Investors are realizing that the premium domestic drive market, people willing to drive 2 to 3 hours for an uncompromised experience, is incredibly lucrative.
Yeah, let's look at GD Group, Australia's largest regional accommodation provider.
Led by Grant Wilkins.
Right, led by founder and CEO Grant Wilkins. They have just acquired the 26-hectare Habitat Noosa Everglades Eco Camp.
Incredible property.
It is. They secured a new 60-year lease from the Queensland government, plus 5 hectares of vacant land for future development. And this asset goes straight into their premium Discovery Resorts portfolio. This single move brings GD Group's total Queensland investment to $110 million over just the past 3 years.
Yeah, and that kind of capital deployment demonstrates a fundamental belief that ecotourism is no longer a niche, budget-friendly sector.
Not at all.
It is a premium product, and we're seeing that exact same confidence in the Hunter Valley wine region.
Oh, the HVL Hotels announcement.
Exactly. HVL Hotels, driven by Managing Director Dominic Lambrinos, just announced a $130 million uber luxury resort called Laval in Pokolbin.
The details on Laval are staggering. I mean, it's set across 165 acres at the historic Lindeman Estate, aiming to open in the second half of 2027.
Massive footprint.
Yeah, and we are talking 65 pavilion-style luxury villas, a 1,000-square-meter wellness spa, and get this, high-tech systems exclusively partnered with Bang & Olufsen.
Wow.
Bello Group is managing it, and they have chef Justin North driving the culinary vision. Okay, that is a heavy-hitting lineup for a regional property.
It really is, but it reflects the new standard for regional wine tourism. When you partner with a brand like Bang & Olufsen for your in-room tech, you aren't just buying speakers.
Right, you're making a statement.
You are signaling a specific standard of living to the ultra-wealthy domestic traveler, but it's not just the eastern states securing this luxury capital.
Oh, true. South Australia.
Yeah, South Australia's Minister for Planning just granted major project approval for a 150-room luxury InterContinental resort development.
Which is a massive win for the region. I mean, securing its first internationally branded luxury hotel following what is being called the state's most stringent planning assessment.
A huge hurdle to clear.
Definitely. Developers Strategic Alliance, backed by Ministers Nick Champion and Emily Burke, pushed this through. But, while the regional sector is focused on sprawling estates, the urban side of the investment wave is doing the exact opposite.
Yeah, going up instead of out.
Exactly. We are seeing massive vertical consolidation.
The mixed-use vertical village is rapidly becoming the dominant model for new urban developments.
It really is. Just look at the announcements this week. Developer Deicorp announced a 100-room courtyard by Marriott Sydney Crow's Nest opening in late 2027.
Right.
But it's occupying the first 3 levels of a $640 million vertical village called Falcon and Alexander, and Trilogy Hotels will manage it.
Incredible scale.
Yeah. And then Radisson Hotel Group is making its Western Australia debut with an upscale Radisson Perth, but again, it's anchoring the Sydney Charles Quarter mixed-use precinct by APPL Group and Mandala Hotels.
There's a clear pattern here.
Definitely. Wyndham Hotels and Resorts and Ovolo Group are teaming up for the Bennett by Ovolo Perth, a 111-room new build opening in 2028. Plus, Accor is bringing the Sebel Sydney Parramatta, an extended-stay hotel, to life in August 2026 with Nearscam Group and GM Michael Rignall.
And we're seeing this internationally, too.
Yes. IHG just signed a 307-room voco Phuket Patong, opening in 2028 as part of the new mixed-use above Patong lifestyle precinct. And Hilton finalized a franchise deal for the 111-room Hilton Garden in Busan, Gyeongsang in South Korea, acting as the core anchor of a new wellness-focused mixed-use project.
Here's where it gets really interesting for me. Are we losing the standalone hotel entirely? I mean, it feels like every new build is just one layer of a massive vertical village.
If we connect this to the bigger picture, it is entirely about risk mitigation for the developers.
Risk mitigation, okay.
Yeah, developing a standalone purpose-built hotel in a volatile economic climate carries immense financial exposure. If tourism dips, the entire asset suffers.
The whole thing goes under. Exactly. But if you were a developer Anchoring a massive residential and retail precinct with a recognized global hotel brand completely changes the math.
Because it instantly validates the project.
Precisely. If you are selling high-end apartments, being able to say it sits above a Marriott or a Radisson elevates the prestige of the residential units.
Oh, for sure.
It provides guaranteed rotating foot traffic to your ground floor retail tenants, and it spreads your operational risk across multiple asset classes: residential, retail, and hospitality.
So it's an ecosystem.
It is. The hotel becomes the beating heart of the village, and the global brand provides a halo effect over the entire $640 million development.
Man, that is so smart. But here's the reality check, right? All of this capital, all these billions of dollars pouring into luxury eco camps and massive vertical villages, well, it only generates a return if the guest experience actually matches the price tag.
It all comes down to the experience.
It really does. And the data proves that people are willing to pay that price tag, provided the experience is there. JL just reported that Asia-Pacific luxury hotel transactions surged 77%.
Wow, 77%.
Yeah, reaching $2.1 billion. And a perfect example of this just finalized in Sydney. The $100 million acquisition and repositioning of the beachfront Coogee Sands Hotel.
Oh yes, Pro Invest Group.
Right, Pro Invest Group executed that deal in partnership with Japan's Mitsubishi Estate Co. The appetite for luxury assets is just ravenous.
It really is. But this brings us to the critical operational challenge we touched on at the start of the show.
The service layer.
Yes, you can build a $130 million resort with Bang & Olufsen speakers in every room, but if the service fails, the physical asset fails.
Doesn't matter how nice the speakers are.
Exactly. Industry analysis released this week from McKinsey and the Travel Foundry highlighted something incredibly crucial for operators to understand. Despite the rapid acceleration of automation and AI, human interaction remains the absolute definitive competitive advantage for driving luxury guest loyalty.
So what does this all mean for the operators listening? Because, the report emphasizes that hotel leaders need to shift from a strictly tech-first approach to a balanced model.
Yes, balance is key.
If I can offer an analogy here, tech in a luxury hotel should be like the stagehand in a theater production. It is essential, it is completely invisible, and it is strictly there to make the human actors look good.
I love that.
Right. Technology must automate the tedious basics like check-in routing or processing room service orders, specifically so the staff are freed up to look the guests in the eye and deliver that high-touch, hyper-personalized service.
That is a brilliant way to frame it. The tech shouldn't replace the hospitality, it should enable it. And if you want proof that this human-centric service model works, look no further than the Choice Hotels International Global Best of Choice Awards just held in Las Vegas.
Oh, the Australian winners.
Yes. 2 Australian upscale franchise properties took home major global recognition against international competition. The Inget Hotel Perth was named an international Best of Choice winner, and Bayside Geelong Hotel won the Upscale Award for commitment to green.
Incredible effort by Trent Fraser's team.
Exactly. Both operate under the Ascend Hotel Collection, driven regionally by Trent Fraser. They aren't winning globally because they have the flashiest apps. They are winning because they execute the fundamentals of human hospitality flawlessly.
And we're seeing that focus on hospitality health and face-to-face interaction at a macro level, too. TRNZ 2026, New Zealand's premier international tourism showcase, successfully concluded at the New Zealand International Convention Center.
A massive event.
Massive.
Yeah.
TI Chief Executive Rebecca Ingram brought together 1,200 delegates and 379 elite international travel buyers, resulting in over 16,000 targeted face-to-face business meetings. The industry engine is roaring when people are in the same room.
It is indeed. And to connect this back to your stagehand analogy, the 2026 Caravan Industry National Conference on the Gold Coast perfectly mirrors this trend.
Oh, how so?
Well, CEO Stuart Lamont announced a record $3.3 billion in national revenue for the sector. But what was most telling to me is that these premier regional operators were aggressively engaging with hospitality tech vendors like Ideas, NewBook, and Room Price Genie.
Which, might seem counterintuitive for caravan parks, but it actually makes perfect sense.
Right.
They are heavily adopting back-end AI revenue tools, specifically so their park operators can spend less time staring at spreadsheets in the back office and more time out on the grounds face-to-face with their guests.
Exactly. The tech handles the pricing algorithms and the humans handle the hospitality. But delivering that crucial human touch across these massive growing portfolios relies entirely on having the right leadership in place.
Without a doubt. And this week, We are seeing an absolute mobilization of regional talent to meet that demand. We have a massive roster of stars in motion taking on these challenges across the Asia-Pacific.
It's a busy week for appointments.
Very busy. Just to highlight the scale of this movement, Santolani has been appointed Director of Marketing at the Langham Gold Coast. Oliver Schwartz has taken the General Manager role at Parmelia Hilton Perth.
Both great moves.
Yeah, and Grant Thompson is the new General Manager at InterContinental Halong Bay Resort. TFE Hotels is shuffling major regional power, bringing in Ajay Vaid as the new Regional General Manager for Victoria, Tasmania, and South Australia, while Nicole Richards takes over Adina Adelaide Treasury.
Strong leadership team there.
Definitely.
Rip.
We're also seeing Melissa Gosselin rejoining TFE in Wellington and Rick Lee stepping up at Adina Heritage Christchurch. Plus, Neil Scanlon has launched his new venture at I-Inform Hospitality Partners.
It's an incredible deployment of operational experience. These are the people tasked with making sure those billion-dollar physical assets actually deliver on the luxury promise.
Yeah, no pressure.
Right. But while the regional leadership is mobilizing, the biggest leadership news of the week happened at the very top corporate level. Choice Hotels International announced a highly sudden leadership transition.
Yeah, this one really caught the market's attention. Long-serving president and CEO Patrick Pacious stepped down from his role, effectively, immediately. Yeah, I mean, he'll stay on as an advisor through August. But Dominic Dragicic, the current Chief Growth and Strategy Officer, has stepped right in as interim CEO while the board conducts their formal search. But wait, if you are an everyday franchisee listening to this, with a sudden, immediate departure at the very top of Choice Hotels, how does that kind of C-suite whiplash ripple down to the confidence of everyday franchisees?
It's a shock to the system.
Doesn't an immediate exit create a vacuum of certainty for the brand?
This raises an important question about corporate governance and market perception. When a highly visible, long-serving CEO departs suddenly, the immediate risk is capital flight from Wall Street and, frankly, panic among the franchise owners.
Yeah, people get nervous.
You have to stabilize the narrative instantly, and the strategic logic here is entirely found in who they selected for the interim seat. Dominic Dragicic isn't just the chief growth officer, he was their chief financial officer from 2017 to 2023.
Oh, I see. So they are putting the money guy in charge.
Precisely. By putting a former CFO into the top job, the board is sending a very clear, unambiguous message to both investors and franchise owners. The math is safe.
Right.
The financial strategies, the revenue structures, and the growth metrics that have guided the company's profitability will remain stable and strictly managed during this vulnerable search period. It is a highly calculated move to project absolute fiscal continuity when the market might otherwise panic.
It makes perfect sense. You anchor the ship with the person who knows exactly how the financial engine works.
Exactly.
And speaking of the systems that keep these engines running, let's look at the actual technology equipping these teams for the future. We talked earlier about technology acting as a stagehand, and this week we saw a major hospitality tech vendor recognized not just as a niche software tool, but as a mainstream commercial powerhouse.
Sebel Hospitality achieved a truly significant milestone this week.
They really did.
They were awarded the prestigious Gold Award in the Small and Medium Enterprise category at the 2026 Business Awards of Macau.
Huge.
Chief Operating Officer Stefan Renzihausen and Chief Product Officer Alexander Wessels accepted the award for their AI-powered communication chatbots and contactless mobile ordering systems, which they now supply to operators across more than 30 countries.
This is what I love about this story. A hospitality tech company winning a broad, overarching business award, not just a specific hotel tech trophy, proves that these systems are no longer viewed as hospitality novelties.
No, not anymore.
They are now recognized as fundamental business infrastructure. The wider commercial world is looking at hospitality tech and saying, this is the benchmark for enterprise efficiency.
What's fascinating here is how perfectly Saba's win ties back to that McKinsey report we unpacked earlier.
Oh, about human interaction.
Exactly. The entire premise of their mobile ordering and AI chatbot system is frictionlessness. It requires no app downloads. It simply gives the guest complete agency over the transactional parts of their stay, like, ordering extra towels or a burger at 2 a.m.
The easy stuff.
Right. While entirely removing that manual friction from the front desk and food and beverage teams, the technology handles the requests instantly, routing it to the right department and freeing up the staff to deliver the actual hospitality.
It is the ultimate execution of the strategy we discussed. Let the AI take the room service order with flawless efficiency so the human staff member has the time to have a genuine, unhurried conversation with the guest down in the lobby.
That is the ideal balance. Though it does leave us with a broader industry dilemma to consider as we wrap up today.
Okay, what's that?
Well, as these tools become increasingly sophisticated and seamless, if an AI can now win overarching regional business awards by perfectly mimicking human service basics and executing them with flawless speed, how long until guests actually start preferring the chatbot's efficiency over human interaction for luxury requests?
That's a profound question.
It is a question every operator will need to answer in the next few years.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry.
Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from TFE Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world.
Until next time, stay well and stay ahead. See you next week.